All right, in this video, I want to tell you why I feel why Amazon is not going to make earnings and why I feel this whole tech, COVID, whatever type situation is just going to be, it's just coming to the end, where all these stocks are just zooming to all-time highs, making hockey sticks, going straight up, a $1.6 trillion company trading straight up like a penny stock. So let's go ahead and talk about it real quick. Okay, so Amazon reports earnings not this week, next week on July, the chart can work here. It's July 23rd, next Thursday, not this Thursday, next Thursday. So go ahead, let's talk about it. So we know Amazon's just been on a killer rip just this week alone. You can see the range here. It's up. It opened at the low and basically closed at the high. It made a new high this week. And the range is 285 points for the week. Isn't that crazy? Can you imagine if you had the calls and just held on to them? So, what represents 285 points in the market cap? Let's pull up Amazon's market cap. You can see right here, right there. Let me go above my head so you can see. The market cap on Amazon is 1.589 trillion. 1 trillion 589 billion 66 million. and you know how that goes. But let's pull up a little old stock like Ford. Let's pull up Ford. Okay, so Ford, $23 billion. That's it. That big old Ford. Now I know they depressed, but it's still Ford. All right, so let's do the math. 400, let's say 285 times 498 million. So basically, they market cap for the week moved $141 billion. Okay, now let's divide that into poor old Ford's 23 point. We'll just give him 24 divided by 24. Okay, what the hell? No. 141 divided by 24. There. It just about equals 6 Fords in a week. Amazon moves 6 Fords in a whole week. So that's besides the point. Let's talk about why I think it's actually going to go down on this earnings based on Jeff Bezos in his last earnings report words himself. Basically based on what he said in the whole company report. So let's go ahead and go back to that earnings. And I think I have it right here. Here it goes. Okay, this is from CNN. Jeff Bezos tells shareholders to take a seat as company manages the COVID-19. Okay, this was updated April 30th. I can't remember when the last earnings report was, but it was 3 months ago. So we're going to read this, okay? This might be a little boring, but it's very important. Please listen. It's not that long. Okay, Amazon sales jumped 26% in the first 3 months of 2020, but the company's profit took a hit as it scrambled to manage the coronavirus pandemic. Net income for the quarter fell nearly 31% for the same period in the prior year to $2.5 billion or 5.1 cents a share. Wall Street analysts had projected quarterly income of $3.15 billion. Okay, so Amazon shares, they went down 4% in after hours trading, right, following the company's earnings report. Well, we know it just reversed it took about a week for it to just reverse that and make all-time highs. CEO Jeff Bezos warned shareholders that the June quarter, could also be challenging for the online retail giant's finance as the company plans to reinvest billions of dollars into managing coronavirus. He actually said, quote, "If you're a shareholder in Amazon, you may want to take a seat because we're not thinking small." Okay, that's what Bezos said in a release. Okay, under normal circumstances, in this coming Q2, we expect to make some $4 billion or more in operating profits. But these are not normal circumstances. Instead, we expect to spend, we know Wall Street hates the word spend, the entirety of that $4 billion and perhaps a bit more on COVID related expenses. He said the company's plans to use those funds to invest in personal protective equipment, enhancing cleaning, and making other adjustments to the fulfillment centers. The company has been criticized in the last recent weeks by employees who say they fear going to work at Amazon's Amazon's warehouses endangering their health. Because we heard in the past that, they've been breakouts in their warehouses. So Bezos also said the company will be spending money on getting products to customers. Amazon has experienced massive online shopping demand as a result of a coronavirus pandemic, and during the quarter, the company hired more than 175,000 fulfillment workers to help handle that jump in orders. And Bezos said Amazon is continuing to hire. Okay, so however, Bezos added, I am confident that our long-term oriented shareholders will understand and embrace our approach, and that, in fact, they would expect no less. Long term. He didn't say short term, 3 months. He said long term. Okay. Handling a spike in sales, right? That's what's going on. Okay. So while Amazon experienced massive order volume during the quarter, the cost of handling it amid the pandemic meant those sales did not translate to major profits. Operating income during the quarter fell 43% in the company's North America segment and turned to a loss in the international segment. In addition to those costs of growing its fulfillment staff, the company also raised pay for hourly employees, which will cost the company nearly $700 million as of May 16th. Yeah, it's in the current quarter. Okay, so Amazon said, that's what they said in the Thursday release. Okay. Much of the demand was for lower margin household items such as cleaning products and toilet paper rather than those discretionary purchase products, like apparel and technology goods, which also weighed in profits. In mid-March, the final month of the quarter, Amazon temporarily restricted the kinds of products that could be sent to its warehouses to essential goods such as household and cleaning supplies. We think that still was the right course of action, and as we add capacity, we're trying to resume more normal operations as far as the shipping of non-essential items and shipping times. Amazon's CFO Brian Olak, and can't pronounce that, said on the analyst call Thursday. So what's the effects of COVID-19 on the cloud? A $10.2 billion revenue from Amazon's cloud business, Amazon Web Services, this is the majority of the business, okay, was essentially in line with analyst expectations and up 33% from the prior year. AWS drives much of Amazon's profits. Okay, as with its cloud peers, Google and Microsoft, the move for many people to working and attending school remotely as a result of coronavirus may have been a boon to AWS, since cloud infrastructure is the key to many work-at-home experiences. However, there's always a however in there. The economic crisis caused by the pandemic may also mean fewer companies spending on the enterprise services such as the cloud. I also want, they mentioned Google and Microsoft, but these cloud companies are blowing up. You got ServiceNow, you got CloudStrike, and I can't even name them all. Okay, so they all compete. Basically, the market for it's expanding, and all these companies is coming out, trying to get that cloud business. Okay, so bucking the trend on advertising. This has been really the best segment of what's going on. And say advertisement has been a growing piece of Amazon's business in recent years, and that it continued during this quarter. Revenues from Amazon's other divisions, which consist mostly advertising sales, grew 44% to $3.9 billion. The gains came in stark contrast to slowdowns in ad sales for other internet giants, including Google. So Google's going down and Amazon's ads going up. The advertising business is often closely tied to the economy, and companies pull back on ad spending as the fallout from the coronavirus grew. Okay, so that means, as it's growing, they're pulling it back, so maybe it might not be as strong, but it's not a major part of their business in a whole. Okay, so, but Amazon's ad business was likely helped by the fact that so many people visited the site to stock up on goods during the quarter. Tom Forte, a senior analyst, the CNN dude said. Okay, I think Amazon's advertising business is going to grow through this or take a lot of share. Okay, so let's go back to the chart. So you can see that why I'm not as bullish as everyone else. I have no idea why this thing went up. Oh, what did it go up for the quarter? Oh, about almost 1,000 points, when they said it's just not really working as we think it will work it will work better in the long term, but not the short term because they're spending a lot of money. Let's go to the company profile and let's look at this chart right here. And you can see Amazon Web Services is responsible for 45% of the business. Now, this has been getting eaten into, or cutting into from other companies like Google, Microsoft, we know is blowing up, and damn near every other company getting into the web services, the cloud business, right? So this number is kind of shrinking as an overall pie, although it's still huge, okay? But a lot of people, they kind of losing their share, right? So that's why Microsoft is blowing up. It's one of the reasons why Amazon North America, this is basically the retail, right? Is responsible for just 38% of their business. Okay, and we heard margins, they spending a lot. Margins ain't gonna be as strong because it's been the cheap stuff, so, I'm just saying. And then Amazon International, which was, the last quarter was just, it was a loss. They didn't say how much, and that's only responsible for 14%. So, is it worthy of 1,000 points and almost close to a $2 trillion company? It's when it reaches 4,000 right there, that's 2 trillion, 2 trillion in market cap. Okay, the thing done gained like 5 Fords this week, 5 Ford Motors this week alone. So it's just incredible. It's insane. It's frothiness. It's incredible frothiness. You're looking at the weekly chart. Let's look at the monthly. Yeah, look at that, man. It's crazy. So I'm not bullish in Amazon. I'm probably going to put a bearish position on and just take that loss because I don't know. I don't know if I think it's going to go down, but this market is crazy. It just may go up. I just don't think Amazon's going to say good things, but I think the market could, be like, oh, well, that's good. Who knows? But I just think that my guessing is that's going to come down. Now, you can't follow me because I suck and I'm just a truck driver. I don't even do analysts, okay? This is my little disclaimer. I usually do, technical type stuff, but I just never seen a stock pop so much, when they told you it's going to suck. They told you it's going to suck. And they told you they spending a lot of money. They spending everything, to be better in the long run. Okay, so let's see what's happened. By the way, during the last quarter, a lot of the stores opened. We experienced reopening. So does that pull in the sales? We'll see. You know what I mean? So that's my guess. So what I plan on doing is when earnings comes, which July 23rd, so that'll be somewhere around these, these options. Come over here. It's gonna be expensive, boy. Maybe I'll buy the 3,200 and sell the 3,100. I can't get real bullish. One put is $10,000. Goodness gracious, that one is 40,400. That's just $100 spread. Yeah, see, it's so expensive. And remember, I'm not 100% sure. It's just my guess. This market's crazy. 30, maybe I got to sell the 3050, 3080. No, 3180. I'm sorry. No, hold on, wait a minute. We want to sell the 3200. And that's if I wouldn't put this trade on until the next week, not this week, but next week, and buy the 3180. Okay, that's gosh, damn it. No, all right, here we go. I'm so used to selling credit spreads. Here we go. Buy the 3,200. Sell the 3,180. Okay, that's 10,000. I might do something like that. And it's for 1,000. I might just throw $1,000 out there. I wish I could buy a put. I wish I could just straight up and buy the put and take the loss. But as you can see, it's just too much money. It is just too much money. And if you were to go out, I don't know, say to November 20th, and you look at these puts, $31,000 to buy it at the money put. I mean, who has that, right? So, I don't even know, man. I got to put something on. I'll try to get creative. I won't be able to try to hit a home run, but just try to make some money. So that's it. That's what I wanted to put out there. So be careful. All of these fangs, we'll look at them real quick. That's Amazon. Here's Facebook. Facebook is just breaking out, and you'll know I'm into Facebook. I think one bad earnings on one of the fangs brings them all down. Netflix, look at Netflix, same thing. Okay, what is it? Google, right? Google's just it didn't even quite break out yet. It's trying. It's just now did it. Well, that's the monthly. The month is still in effect. We just now kind of creased that double top. We closed above it. So this week actually should be huge for Google if, it did open up on the low for the most part and closed on the high. It closed above the double top. So now it has room to run, brand new high. So hopefully Google can run. And I'm kind of in Google as well. Did I hit them all? Microsoft, we'll look at Microsoft. It's not quite part of the FANG, but it kind of is. FANG, or whatever they're calling it. Nice little run. So you can see what's going on with all of them. Did I call Google? Apple. We got to pull up Apple. And then Apple. So the same particular, Google looks the best. Google and Facebook look the best to run if you're going to play the catch-up game. The other stocks are really overextended, especially Amazon. And that's the thing, especially Amazon, when that was the one stock where they told you it was going to be bad to take a seat. Okay, so I hope you like this video. Let's see if it plays out. Remember, the earnings is July 23rd. That's next Thursday, not this Thursday coming, next Thursday, sort of about 10 days away, something like 9, 10, 11, something like that. I don't know. All right, so thanks for watching Dre Trades. I'm out.